If you think you might move in 2 years, renting often makes more financial sense than buying. Here's the math behind that advice. In Ontario, you pay provincial land transfer tax when you buy. On a $700,000 home, that's about $11,475 right away. And then add legal fees, inspections, moving cost, and if your down payment is under 20%, mortgage default insurance. Then there are cost of selling. Real estate commission average around 4% in our market when you add both sides together. Legal fees on the sale side, staging if needed, and moving again. Add it all up and you are looking at close to 6% in transaction cost on the round trip. On a $700,000 home, that's a $42,000. Now look at how much equity you built in 2 years. In the early years of mortgage, most of the payment goes to interest. On a $600,000 mortgage at current rates, you might pay down $25,000 of principal over 24 months. If your property value stays flat, you are $17,000 behind those transaction costs. The market would need to appreciate roughly 3% per year just for you to break even. Renting gives you more flexibility without those costs. You may pay your monthly rent, and when it's time to move, you give notice and go. No commission, no land transfer tax on the next place if you are still renting. No selling stress. Calculation changes if you are confident you will stay longer. By year 5, you have paid down more principal and modest appreciation has more time to cover those initial costs. By the year 7 or 10, ownership usually comes out ahead. But at the 2-year mark, the numbers rarely work unless you expect strong price growth or you are buying well below market value. If your job, relationship, or family situation might change soon, renting protects you from forced selling in a market that might not cooperate with your timeline. Right choice depends upon your specific situation, but understanding the break-even points help you decide with clear eyes instead of pressure.